Good morning, everyone. Let us start with day 28, part 2 of our regular SAP FICO session. Today, we will discuss and we will practically configure the tax procedure, that is, the indirect tax, be it VAT or GST in SAP. So, we have these 7 steps which you have to complete to configure the tax procedure. First is creating the tax procedure, second, assigning the tax procedure to the country, third is creating the condition types, fourth is creating the tax case, fifth, assigning the condition types and tax keys to the procedure, and then defining the tax codes and assigning the GL account to the tax code and the tax keys. I have already done the configuration, and when I explain the configuration, it will be very much clear to you about all these steps. Once it is clear with you, I will show one example for each of the steps that are mentioned over here, and then I will come back and I will explain this particular table that I have designed. This particular table will forms part of our KDS, because initially if I explain this table you will not have any idea. So that's the reason I thought to configure and explain the configuration to you, do one sample configuration for you so that you are aware how that is practically done in the system, and then come back and understand this particular table. So let us start from the system and let's check from the last step to the first step, so we are more clear on how the things are connected with each other. So let me first show you the configuration for assigning the GL account to the tax code and tax keys. For that you have to navigate to the financial accounting, and then financial accounting global setting. Let me re-log in. Go in SPRO, SAP reference IMG, financial accounting global setting, tax and purchase and sales, posting, and here we have defined tax accounts. So this defined under this defined tax accounts, what we do is, let's say I want to assign the GL account 100,501 against tax code I1. So first I have to search what is the tax key. Tax key that we have is IGS. We have IGS. This IGS we have to set the rule at the chart of account, and at the tax code level I want to assign the GL accounts. That means I want to assign the GL account against this tax code and this tax keys. So right now I am in tax key IGS, and I have said that I want to set the GL account as per the tax code. So I'll select this and go in the accounts. So now you see for I1 and IGS, for I1 and IGS in this chart of account, wherein this chart of account is already assigned to my company code, I want this particular GL account to be hit. This is the GL account. Let's also see the next one. Also for IGS, you see, for IGS, for tax code I2, also I want this particular GL account itself. So for IGS, under the chart of account ICIG, for the tax code I2, I want this GL account to trigger. So this is how it is configured. So the GL account is configured at the tax code and tax keys for a chart of account. For a chart of account, and this chart of account is already assigned to company code, in global setting. right? I hope this is clear to you. The next step that we will see is creation of the tax code. For creation of the tax code, you can go into calculation and then define tax codes for sales and purchases. You have to provide the country. So about creation of tax code, you should know that this is created for a country. This is created for a country. And let's see how this I1 has been created. Giving I1, you see these are all the account keys and these are all the condition types. All these are all the account keys and these are all the percentage, sorry, condition types, and this is the level from which a particular rate is applied. Okay, so I want to check for tax code I1, the rate should be 18% and the against the condition type IGSI and IGS. You see the condition type IGSI and account key is IGS and the percentage is 18% is what I have maintained. Okay, and this has to be calculated from the level 100. 100 means the base amount. BSB is nothing in the base condition type. So IGS and IGSI is itself level 110, but it has to be calculated from level 100. So I have given all the tax conditions and account keys. The percentage will be calculated from level 100. That is what is the setting. And at this place, when creating the tax code, you just have to provide the tax rate for the relevant line and deactivate other line. Deactivate other line meaning just select the other line and click on deactivate line and then save. This is how you create the tax code. I will show one sample example of creation of the tax code here, but with the explanation that I have given, you should understand that the tax code is created at the company, created for a country, and rates are updated for condition types and tax keys. And also you have to understand that other lines are deactivated. Other lines are deactivated. So you know this I1 is created for country IN and this IN is assigned to tax procedure J tax PI and this tax code is a input tax. We have to also provide whether input tax or output tax. So this is a input tax. I1 is a input tax is what mentioned here. So we took V. If it is output tax, the value will be A. Let me show you one of output tax as well. So let me take O1. Click on enter. You see for output tax we have A and it is assigned to this country code. This country is assigned to this particular tax procedure. So this is the header level information. And again, for output tax against the condition type IGSO and tax key IGO. IGSO, tax key IGO, the value, the level is 120, but it has to be the calculation of 18% has to be done from level 100. That is the base value. And since it is output, output percentage has to be put in minus. This is the other tax code. Now for IGST output. Now let's see the other tax code for I3. I3 is created in India company code which is assigned to Z tax PI chat tax procedure and it is a input tax. This is a reverse, this is a tax code for the reverse charge mechanism. You know for reverse charge mechanism there is a output also and for that output we get credit also, and that is the input. So for GRIR condition type and IRR tax key, we are assigning 18%. GRIR and IRR, we are assigning 18% in positive as it is input. And again for the output, IGOR and IRR, we are assigning minus 18%, that is the output, minus 18%. This is how the tax code is understood. Next, let's talk about the CGST and IGST. Let's talk about the tax code C1. So the C1 is created in India, and India is assigned to the tax procedure jet tax PI, and this is the input tax. Input tax, we know it's 18%, which is bifurcated into CGST 9% and SGST 9%, which in total becomes 18%. And we know for the CGSI and CGI, for the CGSI and CGI it is 9%, and for the SGSI and SGI again it is 9%, and both are input tax, so we do not put the minus amount. Let's check another for C2 as output tax. C2 output tax, we have CGSO CGO and SGSO SGO, we have to put 9% in negative, so 9% in negative as it is the output tax. So this is the understanding. Let's talk about the C5, which is the 18% under the RCM. So here you see again C5 is created in India company code, and sorry, India IN country code, and this country code is assigned to jet tax PI procedure, and it is an input tax. So for CGST SGST input and CGST SGST output, we have to assign the rates. So in the CGST SGST input, I have assigned 9% each, and the CGST SGST output, again the respective company code, I have assigned 9% negative. So this is how the tax code is created. Coming to next, D1. D1 is non-deductible and non-creditable, and 18%. So against IGSN and NDD, against IGSN and NDD account key, I have assigned 18%, and this is a input tax. Input tax can only be deductible or non-deductible. It is not at all related to output tax. Similarly for D2, for D2, I have assigned for CGST and SGST 99%, and it is input, so in positive, and CGSN, SGSN and NDD. And again this is the input tax created in country IN, which is assigned to the tax procedure jet tax PI. So this is all about creation of the tax code. Next step we had is, for the tax code we have to understand that tax codes are created for a country. This country is assigned to the tax procedure, and rates are updated against the condition types and tax keys, and all other lines in which the rate is not maintained are deactivated. Next is assigning the tax condition types and tax keys to the procedure. For this we have to go in the basic setting and check calculation procedure and come under the define procedure. So our tax procedure is jet tax PI, go in the control data. In the control data, I have listed down here all the combination of condition types and their account keys, that is in this table. Condition types and account keys. IGSI, IGS, you have IGSI, IGS, IGSO, IGO, IGSO, IGO, IGSI, IGS, and so on, means all the combination of the condition types and tax code. and each condition type and tax code label is given a label, like this is 110, 120, 130 and so on. And the base amount condition type is BASB. Base amount condition type is BASB. Okay, so this is how the controls are maintained in the tax procedure. So I have given IGSI and IGS is level 110, but the calculation for this calculation base for this level is level 100, which is the base amount. So the percentage that we specified in the tax code is calculated from level 100, which we also saw in the tax code definition. Next that we have to see is creation of the tax keys. Let's go back, close it, and creation of the tax code is nothing but this particular node where you check and change setting for the tax processing. Click on execute. So here you have to understand that if you are creating tax key for input tax, tax key for input tax, you have to copy from VST, which is SAP standard. And if you are calculating creating the tax key from the for the output tax, you have to copy from MWS, which is the SAP standard output tax. So let me show you VST, which is the SAP standard input tax. Double click to go into detail. Here you have this VST is an input tax which is given in the description, and from the tax type we have to choose whether it is input tax or output tax. So we have chosen this is as input tax. The next radio button is the next checkbox is whether it is deductible or non-deductible, means for this input tax whether we can avail the credit or not. If we cannot, we have to select this, and if we can, we have to come into the next step and select whether this particular input tax will be posted as a separate line in a journal entry. That is what we have given. For the non-creditable, you have to select 3, that is the tax that is calculated for that journal entry will be distributed to the expense or revenue line, and a separate tax line will not be created. Let me go back and let me show one of our input tax, that is IGS. Under the IGS you have same the process key, the description, and it is an input tax and separate line has to be posted. Let me show you one output tax, that is IGO. Under the IGO you see this is a output tax. Under the tax type we have selected one for output tax, and this also has to be posted to the separate line. Similarly for all input and output, let me show one example for non-deductible, that is NDD. Non-deductible is also input tax, but this is non-deductible. This is an input tax. We have selected non-deductible, and the tax that is calculated should be distributed on the expense or revenue line. It has not to be posted separately as a separate item in the journal entry. This is what we have configured here. So this is all about the understanding from creation of the tax key. The next is creation of the condition types. Let's go back, do not save, and check calculation procedure under the basic setting, and you have here defined condition types. Open it, and the standard for creation of the condition type, for input it is MWVS and for output it is MWAS. Let me show the standard. MWVS for input, double click. You see this is a input condition type, and this is related to tax. Calculation is percentage based, and this is related to tax. And item category is selected. Selecting the item category means this condition is can be made applicable at the item level and not only at the header level. If we select the header level, this is applicable only for the header level on the PO. You will get to understand more on this when you practically see how the PO is created. And item condition means for each of the item that is ordered in a PO, this condition can be applied. So for all the condition types, we must select the item condition. And you see the access sequence. Access sequence, the default that is provided by SAP standard is MWST. So this is the setting from the condition type. Let me also show you the output condition type, which is MWAS. MWAS. Open it. So against MWAS condition types also you have all the things same, and the default access sequence is MWST. Go back and check the access sequence. Our access sequences was MWST. MWST. Select it. Go in the accesses. We have this condition type assigned to the access sequence for tax classification as the first, and country or tax code at the second. So first let us see the tax classification, wherein we see the departure, country and region, and second is the tax code. So based on the country and based on the tax code, this particular access is designed. The next table in this access is having two fields, which is also country and tax code. And this is the SAP standard. This is just for our understanding. We don't have to come here to check anything. So by now we understood that for creation of tax keys, we have to copy from VST and MWS, which are SAP standard input and output tax keys. For creation of the condition types, we have to copy from MVAS and MWAS for input and output respectively. The next is assigning the tax procedure to the country. So here we have assigning the tax procedure to the country. Our country is IN and we have assigned jet tax PI as the tax procedure. And the next is creation of the tax procedure. For creation of the tax procedure, simply you go here, define the tax procedure and jet tax PI. You give this tax code and the description and save it. So this is how you create the tax procedure. So now we understand how each of these things are correlated with each other. Now let us try to understand how this particular KDS for tax code is created. But before that, we have already seen how the GL accounts are assigned. Okay, let us try to understand how I have formed this KDS. So first thing I thought in my mind that I will create 18% IGST, 0% IGST and 18% IGST under the RCM. This is the first thought that I had. After that I classified 18% GST I will create as input tax also and output tax also. Similarly for 0% I will create as input tax and output tax. And in the RCM we already have both the categories and input tax and output tax. Based on this, I thought that for creation of 18% input tax I will create tax code I1, for output O1, For 0% input tax I will create I2, and for 0% output tax O2. For RCM input 18% I will create I3, which will have both the conditions for input and output. So the first thought that I brought is what percentage of the tax codes I will be creating, and then I gave a number to the input and output into the RCM tax codes. After this, we know that we have to apply tax rate against the condition type and tax keys in the tax code. So for each tax code I provided a tax key and condition type, wherein IGS represents IGST and I is for input, and tax keys I for input and GS for GST, input GST. And for output I have created IGS for IGST and O for output. And for tax key, IG means input GST, sorry, IG means IGST and O means output. So this is how I means IGST, G means GST, O means outputs. So IGST output, this is IGST input. So this is some of the naming convention that I have created for myself. You can create your own naming convention against each of the tax code for the condition types and tax keys. Now you also know that against the tax code and tax keys you assign a GL account, and all the input tax GLs are my assets and output tax GL are my liabilities. So for the assets we have a particular account group. From that account group I have chosen 100 and 500 series to be the tax accounts, and 200 and 500 series to be the tax liability account, means output tax account. 200 series is for the liabilities, and within 200 series 500 series I have chosen for tax output GL accounts. So this is how I have linked against each tax key and GL and tax code. I have linked one GL account. You know, the non-deductible taxes do not post separately, so we do not need to assign any GL account over here. So this is how you can understand or have the understanding of this table. So first thing you have to bring in your mind is what tax rates you will be creating. Then assign a tax code for that particular rate for the input and output. And then you also know that the tax rate is maintained against the condition type and tax key in the tax procedure in the tax code. So that is why you assign that condition type and tax key against each of the tax code. And you also know against the tax code and tax key the GL account is assigned, and then you create each of those GL account and assign at the tax code and tax key level. The next thing that you have to understand how the GL accounts are created. To create the GL account we use the T code FS00. You choose the T code as FS00, and you can see under the assets I have created all those GL accounts listed on the Excel sheet. Let me show you one of those. So under the assets you can see the input. So input we choose the account group as assets and give the description and provide other control parameters like the tax category wherein all tax type allowed, posting without tax is allowed, sort key as 001 by default, and field status group is G001. Similarly, let's look at the output taxes. Output tax, everything is same. The only thing that we have to change is the description and the account group, which is the liabilities for output. So this is how you create the GL accounts. I hope now you have a fair understanding of all those steps, along with the thought process behind defining the KDS for the indirect tax. Let me close for the day. We'll meet again tomorrow, wherein we will start the configuration for asset accounting. Thank you for the day.